may have been posting gains in recent weeks, but some investors may be a bit hesitant to get back into shares after 3 years of losses. Our next guest has some reasons to be bullish on the market right now, 7 reasons to be exact. Robert Maltbie is hedge fund and manager of Millennium Asset Management, joins us right now to give us some of these reasons. Let's try to get through them as fast as possible. First of all, valuations. You see this is a good reason to move in right now.
Yes, growth stocks are attractive valuations relative to their growth rates and also relative to value rates. We haven't seen them relatively this cheap since 1982 to their PEG ratio.
However, some of the growth stocks, including Broadcom, which you like right now, you got a forward PE of 50. So that's that one for an example.
That may be a little extreme example. More or less the big cap growth is what we're referring to. Also, earnings have been better than expected this quarter.
Right.
And in fact, the surprises are showing them to be 10% better than expected, and the surprises are twice as good as they usually are.
But it's a lowered expectations game, isn't it? I mean, the markets were expecting, a lot of investors were expecting to come out of this malaise, earnings malaise, a year ago. And then we still find ourselves in it.
Well, that is true. The bar has been lowered a bit. Still, notwithstanding, the critical metric to us is that they are beating expectations by a higher than normal rate.
Do you have any concern that might be a little inflated upon those who actually report those numbers?
We think they're actually cleaner with the new rules, the new corporate guidance.
So you have more of a feeling that the earnings you're getting are the earnings that are there.
More real.
Let's talk about the new globalization, Iraq matter. Do you think that we're actually going to be in a better off situation post-war at this point? Because there are people out there that believe this is not the time to buy, because if one more shoe drops, if everybody believes we're in a better situation, but something happens, that's going to take the air out of the market again.
Well, we think the Iraq situation will restore confidence in the market. Prior to the market, we had a lot of things going on, a lot of geopolitical worries, and after the Iraq situation is proceeded better than expected again, we think that the other potential woes out there, say Korea or Iran, other people in the neighborhood are going to be towing the line. They see the resolve of America.
So you see, ultimately that'll actually, longer term,
it should lead to a re-globalization of the global economy. Things should pick up.
You talk about the terror premium as well. Do you think that'll shrink at this point?
Absolutely. Right now, this market, based on historical metrics like interest rates and inflation, should be at 20 times earnings. On the S&P right now, on current earnings, it's about 16.5. We think that difference is pretty much the terror premium in the market. So that comes out, that could provide an additional lift up.
The fifth point is tax cuts. That case has been pretty well stated over and over. The history, however, we've gone through 3 years of a bear market. After the second year, they said you can't have a third. After the third year, they said you can't have a fourth. So you're saying history should tell us that there won't be a fourth.
Well, if we compare this to the other 2 times of duration, we've had 3 bad years in a row. Take the 29 to 32 experience, where we had the Great Depression. After 32, the market bottomed at 50, and within 3 or 4 years went to 200. So it was a nice rally there. Comparing the duration of this, we're actually a couple months beyond it in terms of duration.
And the 7th point we can't really get into too much is that you believe the economy is starting to pick up.
Today, durable goods, better than expected, good sign of that.
All right, but the jobless claim's going in the other direction. Robert Maltbie, thank you very much, hedge fund